People will remember 2020 as the year that discredited the peak oil theory, the idea that economic oil is limited and running out. Proponents originally predicted peak oil would occur around the year 2000. As it became apparent that was a wildly inaccurate prediction, most peak oil advocates pushed the date back to 2020. 2020 is here, but instead of peak oil, the opposite has occurred. On April 20th, 2020, for the first time, oil prices went negative. Not just slightly negative, but deeply. Minus $37.63 per barrel, to be precise. It happened because a glut of oil filled all the storage space to the brim. There was so much oil that there was simply no place to put it all. People were literally paying others to take it off their hands, including oil tankers. So much so that certain oil companies were making $500,000 a day in income. Today, with the world drowning in oil and negative prices, we are farther away from peak oil than ever. I'm bringing this up because it illustrates a crucial economic concept. Understanding is the key to making big profits in the months ahead. One of the longest trends in the history of mankind is the declining cost of commodities over the very long term. The primary reason for this is that humans are becoming more productive thanks in advances in technology. But it's not just that. Humans are just scratching the surface in terms of the Earth's potential. That's why astute economists believe the scarcity of goods is ultimately due to the scarcity of human time. In other words, given enough time, humans can always find ways to produce more of something valuable. This long-term view dispels the notion of peak anything, except for one unique asset. But what about the here and now? The best way to measure the scarcity of something is to look at its hardness. How difficult is it to produce relative to its existing supply? Think of it like this. As prices rise, it incentivizes more production. Increased production creates more supply, which eventually puts downward pressure on prices. Hard assets are relatively more resistant to this process, and as I'll soon show you, there is one unique hard asset that is totally resistant to this process. For example, suppose the price of gold and copper both double. It will incentivize producers to make more copper and gold. But because gold is a harder asset than copper, the resulting increase in gold supply will be less dilutive than that of the increase in copper supply. This characteristic, gold's hardness, is a primary reason why humans have used it as money for over 5,000 years. Gold is an excellent store of value because it is relatively hard to produce. For most of human history, gold hasn't had much competition. It's pretty much always been the hardest of all assets. But that all changed recently. There is a revolutionary new asset that is now just about as hard to produce as gold. In less than 4 years, its hardness will be almost twice that of gold's. I am of course referring to Bitcoin, the world's first scarce digital asset. No other cryptocurrency is genuinely scarce and decentralized like Bitcoin. All of the cryptos have key players, insiders, and development teams that can potentially act like central banks and increase the supply if they choose to. It's a temptation that humans will likely find impossible to resist. Eventually, it will happen. That is the nature of putting the potential to tinker with monetary policy in the hands of humans. Example, there have been debates within the Ethereum community, the second largest cryptocurrency after Bitcoin, on what the inflation schedule should be. The fact that altering the Ether supply is not only possible, but a practical proposal under serious discussion, is proof that it is not a hard asset. Bitcoin, on the other hand, takes humans out of the equation. Its non-discretionary monetary policy is in the hands of an unalterable protocol. Bitcoin is the only crypto that is truly not controlled by anyone. Nobody can get together and alter its supply, which is fixed for eternity. That's the essential difference between Bitcoin and all other cryptos. It is for this simple reason that no other cryptocurrency and no asset other than gold even comes close to possessing the monetary properties of Bitcoin. As a free market, non-government hard money, Bitcoin is in the same league as gold. None of the other cryptos are. The stock-to-flow ratio quantifies the hardness of an asset. The stock part refers to the amount of something available, like current stockpiles. It's the supply already mined and it's available right away. The flow part refers to the new supply added each year from production and other sources. A high stock flow ratio means that the new supply is small relative to the existing supply. A high stock flow ratio also indicates a hard asset. A low stock flow ratio indicates the opposite. A low stock flow ratio means that the new supply or flow can sway the market balance easily. If an annual supply of something is close to its current stock, the new supply will have a lot of power over the price of that commodity or asset. Today, Bitcoin's stock-to-flow ratio is around 56, well above silver at 4.7 and about equal to gold at 58. As Bitcoin's supply growth continues to shrink, Bitcoin's stock-to-flow ratio will double gold's in less than 4 years and continue growing after that. The stock-to-flow ratio shows how Bitcoin will soon become the hardest money the world has ever known. Consider including Bitcoin in the gold and copper example from before, where the rise in price incentivizes more production, which creates more supply and eventually downward pressure on prices. But Bitcoin's supply is perfectly inflexible and is entirely resistant to this process. In other words, no matter how high the Bitcoin price goes, it cannot induce the production of more Bitcoins. There is no other asset in existence like this. This is why Bitcoin is the hardest asset the world has ever known. It's why Raoul Pal, the legendary Goldman Sachs hedge fund manager, has invested half of his wealth in it. And Michael Saylor, the chief executive officer of business intelligence firm MicroStrategy, says he's considered gold before investing $425 million, that's 90% of his business cash, into Bitcoin. Even Paul Tudor Jones has nearly 2% of his assets in Bitcoin. Bitcoin is the only large tradable asset in the world that has a known and fixed supply. According to the unalterable Bitcoin protocol, we know precisely how Bitcoin's supply will grow. There will never be more than 21 million Bitcoins, and there's nothing anyone can do to change it. As of producing this, there are over 18.4 million Bitcoins in existence, about 87% of the total supply. The remaining 2.6 million new Bitcoins will be added at an ever-decreasing rate until the 21 millionth Bitcoin is created in about 120 years from now. By the end of this decade, over 98% of all Bitcoins will have already been created. The supply of Bitcoin won't grow much at all from here, and demand is set to explode. We've already reached what we call peak Bitcoin. Unlike peak oil or peak anything else, peak Bitcoin is real. It's being recognized by leading hedge funds and accepted by thousands of our top businesses. We are very close to a financial reset. The Bitcoin phenomenon is the birthing of an entirely new form of money. We're talking about the emergence of a new asset that became significant global money in less than a decade. There is nothing else comparable. Bitcoin is a completely new animal. Bitcoin has gone from having no market value when it was launched in 2009 to being used to purchase 2 pizzas in 2010, the first commercial exchange, to today generating over $50 billion in daily transaction volume from every country in the world. Right now, over 100,000 merchants accept Bitcoin as payment, including Amazon, Expedia, Microsoft, Starbucks, Burger King, McDonald's. That number is rapidly growing. This is what the process of a new asset becoming money looks like, and it's just getting started. It doesn't happen overnight. But when you take a step back and understand the fundamentals of the long-term trend, the big picture is profound. Today, Bitcoin has grown to have a market capitalization of over $186 billion, almost 3 times as large as the monetary base of Argentina. Some hedge fund managers expect it to be over $1 trillion next year. That's 5 times current levels. When you understand how the cryptocurrency markets are working now and why most purchase Bitcoin to trade other altcoins, you'll be able to see why. If it were a government currency, Bitcoin would be the 35th largest currency by monetary base, just ahead of the Qatari Rial. Think of Bitcoin's strict scarcity and the shrinking supply growth like a black hole sucking in capital from weaker currencies. With that big picture view in mind, I think it's clear we still are in the early days of Bitcoin. In terms of global financial assets, Bitcoin's market cap is barely a blip, as you'll see in this chart. Some proponents believe the endgame for Bitcoin is to eventually emerge as the world's dominant form of money, a process called hyper-Bitcoinization. It's a global voluntary transition from inferior currencies to superior one. If hyper-Bitcoinization even comes close to happening, the case for which gets stronger every day, it would be the greatest transfer of wealth in human history. Capital is attracted to hard assets, and Bitcoin is the world's hardest. I think this process will not only continue, but accelerate exponentially in the years ahead. You can be on the right side of it by owning some Bitcoin and others set to be massive cryptos. We can show you which ones are set to fly, when to buy, and how to buy in step-by-step video instructions our members get access to. CryptoMetalResearch.com can also show you how you can access companies set to soar from supplying services to the blockchain industry. We will show you how to get in and out and at what levels. Our members also get another report where I show you another way to make a fortune from this trend, and you don't even need the riskier cryptocurrencies. And they even pay you an income. If Bitcoin is going to compete with and eventually overtake government fiat currencies, and I think it has an excellent chance of doing that, then this market cap must grow substantially. If Bitcoin's market cap rises to that of gold, the price of a single Bitcoin would be worth $428,571. If hyper-Bitcoinization happens and Bitcoin's market cap rises to that of all fiat money, a single Bitcoin would be worth almost $2 million. Each Bitcoin can be divided into 100 million units called Satoshis. In the event of hyper-Bitcoinization, each Satoshi would be worth 2 cents. With that perspective in mind, Bitcoin has an incredible upside at current prices. Moving towards hyper-Bitcoinization is not as far-fetched as it might seem. Remember, right now, Bitcoin's stock-flow ratio indicates its hardness is roughly equal to that of gold. As Bitcoin supply growth continuously decreases, its hardness will double gold's in less than 4 years and only increase from there. Now is the time to get education on cryptocurrencies. Further, it's clear to me that Bitcoin is a superior form of money to government fiat currencies, which of course have no limit on how much is printed, and Bitcoin's market cap has already surpassed the monetary base of most countries. I think this process will not only continue but accelerate. That's because governments around the world are printing unprecedented amounts of currency, especially in the wake of the global pandemic. The anonymous creator of Bitcoin, Satoshi Nakamoto, wrote, "The root problem with conventional currency is that all the trust that's required to make it work. The central bank must be trusted not to debase the currency, but the history of fiat currency is full of breaches of that trust. Owning Bitcoin, some specific altcoins and fintech support companies offers you a way to opt out of this lunacy. I think an increasing number of people around the world are going to do exactly that, which along with peak Bitcoin is going to turbocharge the trend of hyper-Bitcoinization, boost Bitcoin's price, and all the service companies that facilitate and make the industry viable." CryptoMetalResearch.com is about building your wealth by taking the global macro view. Currently, we are focused in two key investment sectors, metal commodities and cryptocurrency. Both are at the beginnings of a huge bull market that will likely, given the current economic and political backdrop, dwarf all other bull markets. However, there is huge volatility and great risk. Not everything in these markets is safe or indeed investable. Enter CryptoMetalResearch.com, your guide and mentor. There are two reasons to use our portfolio education and analysis. First, we are linked to some of the brightest global minds in crypto and metal commodity investment research, with over 50 years experience providing portfolio education and market signals to our members and partners via our newsletters, our online membership site, and our social media platforms. Second, we use historical technical analysis and market patterns with predictable human behavior to analyze the technical support levels and entry and exit points for all our commodity trading recommendations. Our aim is to build a mutually beneficial relationship and grow your knowledge and wealth so you can take back control in this exciting sector over the next decade. We have a variety of products to suit all investors' pockets, and our goal is to grow your wealth by multiple factors over the next few years. So head over to CryptoMetalResearch.com and partner with us in this exciting financial sector.